Adobe just reported earnings for the full fiscal year of 2022, which in their case, ended in December 2. Let's go over a few highlights, take a look at the financial statements, and calculate the stock's fair value in order to find out if the current price is a buy. I'll also give my 2 cents on the Figma acquisition. On the main highlights, Adobe achieved total revenues of $17.6 billion in fiscal year 2022, which represents 12% year-over-year growth. Breaking down into each segment, creative revenue grew 10% to $10.4 billion. Document Cloud grew 21% to $2.4 billion. And Digital Experience had a 14% growth, getting to $4.4 billion. They also repurchased approximately 15.7 million shares during the year, which represents about 3% of total shares. One last thing worth mentioning is that they gave guidance for the full year of 2023, expecting revenues of around $19.2 billion, a 9% growth year-over-year, or 13% considering constant currency. Note that these numbers don't include the Figma acquisition, a deal they should close during 2023. Moving on to their balance sheet, Adobe has things pretty well balanced here, about $6 billion in cash plus short-term investments against a $4 billion debt. There was no significant changes in other accounts, nothing to worry about. On the income statement, as we've seen in the highlights, they achieved a 12% growth in revenues. As for the expenses, there are two problems I see here. Operating expenses increased 15% and income taxes almost 50%. These two factors made profits this year to be lower than last year, even though revenues grew 12%. The operating expense probably would have been in line with revenues if it wasn't for the FX rates impacts, so I guess this is not that big of a problem. About the income taxes, they mentioned on the call a tax rate increase, but didn't give much more information. It doesn't seem to be a one-time event. Their cash flow is pretty straightforward. They paid $388 million in stock-based compensation and repurchased $1.7 billion of common shares. The other numbers we see here are regular adjustments made in the cash flow, all good. Before we get to the valuation part of the video, let me give some thoughts on the Figma deal. As you might have heard, Adobe intends to buy Figma for $20 billion in 2023. If you don't know, Figma is a web design software, mostly used to create prototypes of websites and apps. I have used Figma before and it's really great, not only due to all the features it has, but the way they made it work. It's really easy to collaborate with people, it's all on the cloud, very different from Adobe's products, which I have used as well, especially Photoshop. The whole problem here is the valuation. Just about a year ago, Figma raised $200 million at a $10 billion valuation, half the price Adobe is paying, at a time when money was being thrown at these fast-growing tech companies. Figma is currently doing $200 million in revenues this year, so Adobe is paying 100 times sales for the company, a massive multiple. I guess it's necessary to maintain the top position on software for designers. They were in fact losing market share and couldn't afford to lose the deal to other competitors. So, long-term I think it will be worth it, while on the short term, the impact won't be as nice. If the deal does go through, they will have to issue a bunch of shares and debt, as they don't have such a high cash position. And as Figma doesn't generate that much money, it's not like they will have a big pump on the income statement to compensate. One important thing to think about in this whole situation is that Adobe is basically a monopoly in terms of software for designers. It's like their moat, almost all designers use their tools, they are the industry standard. The fact they had to pay so much for a single tool I believe shows that their moat may not be that strong after all. Moving on to the valuation now, I'll do 3 scenarios, the worst being very conservative, the base considering what I think is the most likely to turn out, and the best, where I'm more bullish. For each scenario I'll consider different assumptions for the next 5 years. These assumptions are revenue growth, share change, profit margin, price to earnings and expected returns. For revenue growth, since Adobe transitioned to a subscription business, their growth has been pretty consistent, being over 20% in most years. As we've seen in their financials, this past year they grew 12% and are forecasting a 9% growth for next year, or 13% in constant currency. Analysts are expecting around low teens for the next few years, in line with management's guidance, considering this currency issue will not last forever. So I'll do similar to them, 11 on the worst case, 12 on the base, and 13% on the best. On share change, Adobe has been repurchasing about 1% of shares every year in the last few years, raising it to 3% this year. The problem going forward I think is the Figma acquisition. That will be partially paid with shares, so I'm guessing they will actually increase in the near future. But I also think as they have such a stable business, it's likely that they will go back to the repurchase plan after things settle in, and if the deal does come through, their revenue growth might end up being a little higher. With that said, as we are currently in a very gray area in my opinion, I'm not gonna consider changes here, leaving it 0% in all scenarios. For profit margin, one thing I have to mention is that Adobe has one of the highest gross margins I've seen, around 88%. This means they only spend 12 cents for every dollar they make. This is before R&D and SG&A of course, but still, absolutely amazing. As for their net margins, it's ranging between 26 and 30%. On 2020 they had a positive income tax of about $1 billion that made margins skyrocket, but it wasn't a recurring event. I think this 26 to 30 range makes sense with their business model, although they could improve it to low 30s, it's important they keep reinvesting in R&D, so I consider 26% for the worst case, 28% for the base, and 30% for the best case scenario. Price to earnings. Taking a quick look at their historic numbers, we can see that in the past few years their PE was always pretty high, ranging from 40s to 60s, but it has been coming down this year as their growth slowed a little, together with all macroeconomic issues such as high inflation and interest rates. We are currently around 32, which I think is a bit high considering their future growth of low teens. I'm gonna do 16 on the worst, 18 on the base, and for the best case, 20. As I usually do on expected returns, I'm gonna consider 15% in all scenarios, what I think is a good annual return, above the market average of 10, giving me a good safety margin in case my assumptions are wrong. Okay, let's see what prices we get in each scenario and compare them to the current price of $347. Keep in mind that this is not financial advice. For the worst case the fair value for Adobe stock is $176, so if these assumptions are correct, Adobe stock needs to drop another 49%, which I think is unlikely. For the base case, the buying price is $215, a 38% difference. And on the best case, the most optimistic scenario, the price is $261, meaning the current price is still overvalued by 25%.